When I was 21 years old, 22, I just hit my senior year at college. I had hustled like crazy in my direct sales business and banked up $50,000. And I didn't buy anything. I mean, I was still wearing the basketball shoes that I had in high school, my senior year of college. I had the same free basketball camp T-shirts that I got, when I was playing high school ball. I was told I was cheap by my friends, and I was still drinking Natty Light, Natural Light. So I just banked everything that I made, and so I get to my senior year, the stock market's cranking, right? I mean, tech stocks have been going up 40% per year. My money's in the bank; it's not making anything, 1%, 2%, and I said, okay, I have FOMO, fear of missing out. I got to get involved. So I walk into a financial, advisor's office, and he said, "Yeah, stocks always go up over the long term, and I think you could be a lot more aggressive because you're young." And so he put everything into tech stocks, and within 5 months, half my portfolio was wiped out. Well, that's a big hit when you're 21, 22, and you just sacrificed and saved for 3 years. Now I can lose 25 grand, and I don't care at all. Like that doesn't bother me one bit. But at that time, 50% of your net worth gets evaporated because you listen to somebody that they were salesmen. I mean, essentially, it was a financial salesman, right? And his strategy was extremely risky, and I didn't know how risky it was walking into it. And I bought assets that I did not understand. And so when they dropped in value, I did what most people do when they're what I call unsophisticated investors. I panic sold. I cashed out. I probably had Amazon in that basket. I'm pretty sure I did. I don't want to, honestly, I don't want to know. It'd be too, I'm better off that I
Too
can't go
painful.
back and figure it out. So that was a big mistake, is listening and taking advice of, risking too much with your principal capital. So that taught me a major lesson that I teach adamantly today. Your first 100 grand that you bank, which is very difficult to get to 100 grand from zero. I think it's easier to go from 100 to a million than is to go from zero to 100K. That first 100 grand, you got to protect it. It's not the capital to take risks with. You got to take some level of risk to get a return. Otherwise, you're getting 2%, 3% returns, and your money's getting gobbled up by inflation. So you got to take some risk, but calculate a risk, get into things, buy things that you understand, have somebody to coach you and that's seasoned, that can guide you to the right ways to do it. That was a big thing. And then other mistakes. I mean, listening to and trusting a turnkey provider operator that without doing any background checks, due diligence, just kind of trusting somebody with a pretty large amount of money, that was misguided advice, essentially. So those are kind of a couple examples, I would say, misguided.